Now, the show dedicated to rebuilding Washington, D.C.'s metropolitan housing and credit markets with the timely, trusted advice you need to make the right decisions. This is the Todd Laborowitz Show.
Good afternoon. As your friend and host, Todd Laborowitz, I'm privileged to share every Saturday afternoon at 1 p.m. with you on the Todd Laborowitz Show, which is part of Real Estate Radio Network here on Salem Broadcast, WRC 1260 AM. Well, here with me now is Stephen Strauss with Security One Lending, and we're going to be talking about reverse mortgages. Steve actually went to George Washington University. He got his bachelor's in business administration, and he's been doing the mortgage business, I guess, since December of 2007?
That's when I started the reverse mortgage business.
Okay, so before you were doing the forward, and then 2007 you got right into the reverse.
That's correct.
And how did you get involved? That's a big jump going from forward to reverse.
When I was a forward loan officer doing traditional mortgage, a client came to me, was interested in reverse mortgage. So I looked into it a little bit and I responded, well, I don't think you want to do that. It's really not a great product. So one of my banks was offering a seminar. I went ahead and took their seminar. I came back and said, no, I was wrong. It really is a great product for the right people. And eventually, I devoted myself to nothing but reverse mortgage.
Wow. So the reverse mortgage, I know in the 80s, we had a very big misunderstanding. There was a lot of problems. And like you said at first, before the seminar, you actually you weren't a fan of it either. True. So having you here today, I'm hoping you can kind of explain it to all of us, because being in the mortgage business myself, I'm familiar with it, but it's a sensitive topic because do you deal with HUD? Do you deal with a private lender? What happens if they go bankrupt? There's a lot of questions that I have for you.
There certainly are a lot of questions, and the industry has evolved over the years. In fact, in the early part of reverse mortgage, there were no regulations. So you had reverse mortgages with terrible terms, ridiculous interest rates, equity sharing, and some of those are actually still around, and you might read about those somewhere. But today they're heavily regulated. In fact, it's probably the product that has the most consumer safeguards of just about any financial product out there today.
Okay, to start off for our listeners, why don't we explain what a reverse mortgage is in simple terms, like as if I'm a 10-year-old.
Well, in very simple terms, it is a mortgage for homeowners age 62 and over that allows them to convert a portion of their equity from their home into tax-free cash. Unlike traditional loans, no payments are required, and the loan does not have to be paid back until the home is no longer their principal residence. That's it in a nutshell.
Now, if someone owns their home free outright, what's the difference between a reverse mortgage and a home equity loan? I know the answer. I'm just trying to get it for the listeners.
Well, the biggest difference is that there are no payments required. However, there are some other significant differences as well. First of all, it's likely that a reverse mortgage line of credit is easier to get. There are limited qualifications, although that will change later this year. There'll be some additional financial assessment. But in addition to that, a reverse mortgage line of credit is non-cancelable regardless of the value of the home. And the other unusual feature of it is there is a growth factor attached to the line of credit. So when you get the line of credit, it actually can increase in value over time. Financial advisors love that feature.
Okay. Now, you mentioned that there's no payments on a reverse mortgage, but property tax and condo fees and like an HO6 or hazard insurance, they're still paying it. Or is it coming out of the fees from the reverse mortgage?
No, that is the homeowner's responsibility to pay their taxes and insurance.
Got it. And as far as the regulations that you mentioned, saying that it's highly regulated, tell us what are some of the changes and how do they affect our clients?
Sure. Late last year, Congress passed the Homeowner Reverse Mortgage Stabilization Act. I think I've got that name right. It's close. And essentially, too many homeowners were taking all of the proceeds available from a reverse mortgage up front as a lump sum. And that left them with little to no borrowing power down the road. So all of a sudden you might have problems like property taxes becoming past due, insurance, maintenance on the home. And all of those issues can cause default if you're late on your property taxes. So the original intent of the program was not to meet short-term financial needs. It was really to create a long-term flow of cash. So what has happened most recently is that loan amounts have been reduced by about 10 to 15%. The first-year withdrawals are limited to 60% of the total loan available, with exceptions for mandatory debt such as existing liens. And later this year, we'll begin analyzing income, debt, and credit to be sure that future tax and insurance problems don't occur.
So this is all going in place to protect the consumer.
Exactly.
Perfect. Well, by the way, if you're just tuning in, I have with me Stephen Strauss with Security One Lending, and I am your host, Todd Laborowit, and you're listening to Salem Broadcast Network, WRC 1260 AM. Well, Stephen, you mentioned some of the good candidates. Can you tell us who would not be suitable for a reverse mortgage?
Sure. There are several categories of folks who it may not be suitable for. One would be, of course, those with insufficient equity. Unless homeowners have somewhere close to 50% equity, they really won't qualify for the reverse mortgage, or the reverse mortgage will not fund sufficient dollars to pay off that existing mortgage. And another an unsuitable candidate would be those that have costs associated with living in the home that are beyond what's affordable, even with a reverse mortgage, such as property taxes, insurance, maintenance on the home. And those are the situations we want to avoid. And then the reverse mortgage is also not appropriate for families where the heirs may want to inherit the home and keep the home in the family.
Okay. Now, I got a lot of questions that people have is how do they receive their payments? I know you talked about lump sums being a problem because they have problems later. Like, how's it all structured and broken out?
Right. That's a great question. There are several different options for receiving funds with limits. One is via line of credit. You simply create a line of credit and you can access the funds as you need. Another is a monthly draw, similar to an annuity, and you can create a term or you can create an annuity or a payment flow for life. You are able to receive a lump sum, but that's restricted, especially the first year. Or you can receive a combination of all of those, keeping in mind that any existing liens at origination of the loan have to be paid off right at the time of origination.
Yeah. Now, there's so much that goes into this. Do you recommend they talk to their financial advisor or CPA when they're doing a decision like this, or is this something you just walk them through?
Absolutely. We always recommend talking with financial advisor, estate attorney, and bringing the kids in. Bring the kids in. By and large, we find that the families are very receptive to the idea that the parents are going to be comfortable in their retirement years.
Okay. And a big question that came up recently, I've heard of it like maybe a year ago and it's getting really popular, is reverse mortgage is getting popular with the purchase business.
Yes, that's a relatively new product, and it is starting to take off in some of the adult living communities. And it is a perfect product to be used for downsizing homeowners who want to sell their existing home and then go into a smaller home.
Can you walk me through a story?
Sure. The most recent comes to mind. I received a call recently from a borrower who took out a reverse mortgage 2 years ago. One of her dreams was to take her grandchildren to Disney World, and she used about $20,000 of her line of credit to take a fabulous trip to Disney World. And she called me to tell me about it.
Wonderful. Well, if anyone wants to get in touch with you, what I'd like to offer our listeners is the opportunity to get in touch with Stephen Strauss about reverse mortgages. So go ahead and text me reverse mortgage to 301-467-8444. That number again is 301-467-8444. And we'll be right back after these messages with Bill Mealy from William C. Mealy Attorneys at Law.
You don't go through life with a paralyzing fear every time you have a financial transaction. So why is applying for a mortgage so scary? At Topaz Mortgage with Todd Laborwit, it is about educating and empowering you to get from point A to point B. Todd provides you with his exact closing cost, best interest rate, then invites you to shop around. Plus, if you call with questions, Todd picks up with the answers. Learn more at whytopaz.com. They are industry experts that care. Topaz Mortgage, NMLS 131548, licensed by the Virginia State Corporation Commission, MC 5344, Washington, D.C., MLB 131548, Maryland 18330, Todd Laborwit, NMLS 131497.